I was watching a television and I saw a fintech advertisement. It says that investing in equity market is so easy. I was just, but I understood like a similar first time investor that it is talking about ease of transaction or ease of investments. Or if the advertisement referring only to the ease of transaction, then it's a welcome sign because everybody needs ease of doing everything. But if I understood that the advertisement they are talking about ease of transaction, ease of investments, then it's an issue because investment in the equity market is not a child's play. My worry got a lot of increased when I read a news item that the new Demat account open have hit all-time high, record high in financial year 2021. I just also get a lot of calls from the first-time investors. They are also the fintech guys who are really good at technology, or people are working in the millennials who are keen on trying to make fast money. They want to invest in equity market. They want to jump and invest equity market in big time. Also get call from a lot of millennials that they want to trade in cryptocurrencies because they read a lot of articles in cryptocurrencies these days in the headlines of the media. So they become too crazed to start investing in cryptocurrencies before they are testing water in the mutual fund and equity markets. First and foremost, so people have to understand that equity market is not like a one-time exercise. It's for creating a wealth, a long-term wealth creation. If you want to create a wealth for long term, you need to understand the equity cult is about a long-term investment. It's not about short duration. We also know that at time, due to our luck or but probably it's about our time, we make good money at short period of time. But in a longer time, we become overconfident, try to take aggressive bet on the trading, then probably it will be a flatter day for us. And probably whatever you accumulated over the years of time, probably you could have lost in a single trade. So that is why you need to understand its trading is all about a small portion of your wealth. Assume you have 100 rupees, you can trade for 10 rupees of that. Balance 90 rupees, you should invest for a long term. This 10%, whatever you invest in there for the trading, it's predominantly used for propping up your portfolio returns. As you expect a portfolio return of 20% or 12%, 15%. This 10%, if you try to earn 20%, 30%, that add 2 to 3% of the overall portfolio. So assume if a 10% of rupee invested earned 30% return, if you calculate into the overall portfolio, it hardly comes around 3% of that. So if you construct a portfolio to earn 12% return, this add 3% will add and will give you 15% return on that. This is where you need to invest. And before you are getting into equity market, you need to take somebody's advice or will try to spend some time to understand the companies and other about that. And for me also, because I come from a different background, when I started my career, I was being an electrical engineer. I have had a lot of idea on electrical, but I don't have anything about the investments. So I thought in late 80s to invest in equity market. Since I come from electrical background, I picked up some stocks which are related to my industry, and then I invested. I made some money. So that was the kicker for me to get into an equity market, and completely that helped me to shift line from electrical to my finance industry. So that 30 years of financial journey started with my small investments in the equity market. So that journey started off. So then I started to make money. So during the Arshad Mehta period, the things were going really hot. And I also part of the journey. Luckily I made some money on that. So that from that onwards we started to get kick off equity market. Similarly to the Arshad Mehta period, now this all the fintech company is pushing smaller and millennials to get into the equity market. It's a good part that the fintech company is doing that. They are indirectly promoting the equity cult in India. That is always welcome of sign. But at the same time, the worry is that how you are going to take the investment in the equity market. For example, I narrate my own story. Way back in early part of 2000, when I was started trading in a huge position. Those days I used to have a huge position every day. So one day I created a huge position. Something is went on my mind. I don't know. Somehow I'm uncomfortable with the position. So all of a sudden I thought with my hindsight said that better we'll sell and come out of that. I was sitting some profit that particular day. So I decided to sell all the whatever my holdings and then I squared off all my positions. In couple of minutes time I saw there was a ticker running on my TV saying that the parliament has been attacked by terrorists. They're entering into a parliament. So that is why I saw that the market was falling like a just play of cards. It is just falling everywhere. So for that day, at the end of the day, I was thinking that my position could have been open, position could have been there. I could have made a huge loss on that particular day. So that day was an awakening moment in my life. Then from there onwards, I always take equity only for wealth creation. I don't use for trading. Occasionally, I just for fun, I just trade. I just for fun, I just trade. I just invest 5-10% of my order the outstanding portfolio is there. I try to you can use an equity and trade, but it is only for my joy of increasing the popping up portfolio. I at a right moment I know that there is a possibility you can make money. So those days I go and try to trade equity market as a trading option just for fun, not for creating a wealth creation. My wealth creation has all been happened on through mutual fund and equity. I buy, I hold it for a longer duration time. Unless the industry undergoes a drastic change, I just move out of that industry. If not, I just continue to hold on to my positions till I get a decent profit or till my goals, financial goals are getting reached. I also go through the people how they are invest onto that. Though being a financial planner, I recommend people to use an asset allocation to build your portfolio. I always have a curiosity to see that how other people are also playing. That's a one fintech company. He is holding a huge share of an Indian equity cult. There, I just saw his personal portfolio, how it is look. He's having 50% into equity, 43% is debt, and 2% into gold, and rest of that in real estate. A person who is breathed there and he doesn't have any trading account. Whatever the equity is only purely used for wealth creation. He says, I don't trade on a day to day. So when a person who is making quite a good of money in equity market, but he is not considering himself as a trader, he is not trading onto that. But unfortunately, I feel that millennials become very, very crazy. Everybody wants to trade onto that, and then they want to trade on cryptocurrency, all that. Please do understand when you want to create a wealth, you need to understand patience. You know, a State Bank of India or Reliance have not grown in a day's time. They've grown over the period of time. Let it be take IT companies like TCS, Infosys, Wipro. They have not grown in a day. They have grown over a period of time. You also get across the news saying that if you invested X amount in a Wipro, it has grown so many times all this period of time. Your current value could be 2 crore, 3 crore. We get all this in WhatsApp. So that clearly shows. For example, now look at it at Nifty 500. The last 10 years time, it has grown 2.7 times, the 2x, 2.7x. So during the same period, if you look at it, 91 stocks have grown by 10 multiples, and 20 multiples stock by 46 stocks, and 50 multiples by 18 stocks. Together, if you add all these, 155 stocks of Nifty out of Nifty 500 have given anywhere between 10 to 50%, 50 times of returns. So that clearly shows equity is a long-term investments. If you want to do investments in equity, please learn and then start opening an account and then start learning it about the small level. Don't trade in a big level. Even in the 10% allocation, what you're allocating for a trading also, do a small trade. Try to understand over a 6 months, 1 year period of time, you get a grip of what you are trying to do. And also, whenever you trade, please keep your mind first on the first day. If I make a loss of 20-30%, I'll exit of these positions. Or else keep a position where you want to square up. If it is 10%, 20%, depending upon your individual risk, you fix a target. When that loss is made, please square up the position and come out of that. Because it's if you try to trade in a derivatives or else options, then the problems will increase manifold. Because one bad trade will keep you away from equity market. Please have that in mind. So trading is it's a fun. You can do that, but fun cannot be an 100% of that. So you can allocate more towards the wealth creation and balance something to with learning and equity current, all that. So this is my advice. I'm just closing of this session. We'll meet some other session. If you want, you just subscribe to my YouTube channel. Happy investing. Wish you that.